The first thing we would do in the normal process is determine our settings that we want to do. So any parameter default will be automatically applied to the records that we import. So all records will import as they are, but we will give them their 20th of the days or payments or similar. So that's one thing to set there. We can do from that, and any other things that need to be set. The second thing you're doing is under the Utilities menu, you will find a Settings function which is labeled with the integration that we've chosen. And in this instance, you need to then follow the following steps, which is to access your registered certificate, which is done under the OpenSSL, and that is created by the Xero process that you need to follow to get the certificate. The certificate password, which is entered by you when you create the certificate. And then we have two keys which are generated from Xero. The first one is the consumer key, and the second one is the consumer key, the first one is the second. Now this is a choice we made for security because we're going to directly read the data. We do test connection, we get an OK, and we're in business. So that's the first stage. That is simply from settings, linking the connections. As you saw, is relatively quick and easy. Right. The next stage is to import the data. So this is now taking Forecast 5 out of here, reaching into Xero, extracting and formatting and selecting all of the relevant general ledger records that are in there. We are also at the same time recognizing tracking categories that are on the transaction. So we have, because of the nature of Xero, had to read all of the transactions. And what we have done is where there is no tracking, we have created a sales record, which is unassigned, and then if there is tracking, where I have set up a country and city combination in this demo data, and it is only demo data, so it's not comprehensive. So we've got Australia, Sydney, New Zealand, Auckland, etc., etc. And we've got that. So this presents us the chart of accounts from Xero. We have the option to round it to the nearest 110 whatever dollar value, and now what we need to do, or are able to do, is to map every record to the correct type. So whether we want to see that as income, we can make that separately invoiced income. We can do that as accrued and prepaid income. We can recognize our cost of goods sold as stock, for example, or stock made, which is a new record in this version, similar to like that. And we can track down all of the records that we see. They're that. Now, something like interest expense. As Forecast 5, as you'll be aware from the bank, and that we will calculate interest. So you may have a twofold issue here, is to import it to give you the data, but then to remove it, or we have provided a facility not to import things. So you'll see that in more detail. Now, we follow through that area and we come down to our balance sheet records, and here's where, as Forecast 5, we implement some processes that we need to manage. There is a Westpac bank account, but we have it as a main bank account. So we actually map this to our main bank account. And at that point, we do not import that bank account. If it's a fixed asset, on a Forecast 5 record, we include the depreciation on the record. So what we want to do is join that to the fixed asset record, simply by following the drop-downs that was provided, selecting the record we want to map, and then taking that record, let's accumulated depreciation, and putting it into do not import. Right, now further down here we have the rest of the balance sheet. So we have a system record called debtors control, another one called creditors. So we do not want to import those twice because we're going to map those. GST is another system record. PAYE is another one system record. And these are these records you're seeing right here down the left here, what we call the forecast records. We also have some issues around, well, not issues, we also have a record for retained earnings. So we won't import that, and we're going to use the owner's funds introduced in this sample as our share capital. Now we're presented in our import with the profit system records or the forecast records here. So the GST, and knowing the chart, GST sits down the bottom here. We can go to here and select the GST to go to there. Trade creditors, again, all of the balance sheet in Xero. At the bottom, there's the accounts payable. Missed it, select it, accounts receivable, The capital, which we said was the owner, will use as the owner's funds introduced, which is actually there. The retained earnings, again, is down the bottom here. So we map each of those records, and we can work down, and then the final one we would do here is the PAYE, which sits there as a PAYE payable, and we can just check that we did not import those. So, simple form, we've now mapped each of those records to their counterparts inside Forecast 5. We prevented them being imported twice. It is not a major problem if it does, because you can still delete them. And then we now process the import. So this is bringing in that chart of accounts from Xero, as we saw it there, creating the records, all the records within the Forecast 5, bringing in the transaction balances, and creating the budget ready with the data for the 1 year. So it does take a little bit of time, not a huge amount of time in this instance, but to get back to Xero, bring that in, populate the tree as we call it, and fill that data. Right, so we have now succeeded with that. What we will do is the system closes the forecast and asks us to reopen it, so we've got that. And we can now see these records have been brought into the system as we wanted them to be, mapped and listed to each of those experiences there. So if we run quickly our report, we will see some level of data, which is not ideal, or it's not comprehensive, but it is data that we've got in there. And so it's just purely demo data. Right, so we now have, in under 3 or 4 minutes, or 5 or 6 minutes, whatever it was there, our data set inside Forecast 5. What we can do now is walk through each of our records, if we wish to, amend any terms, update any figures or anything like that, change any record types that we may have wanted or wanted to assign. Those that we've chosen to do as separately invoice have already been reflected. So just looking closely at the record, firstly, you'll see now the general ledger code has been logged and recorded into the GL code field, and the tracking category has been put into the project code and external code. So one of the features we introduced with this is the ability within a report to do a profit and loss by tracking category. Which of these categories? And each of those are what we're able to report on, to run actually a report by tracking category combination. So that's something we've introduced as a feature with this to provide more information. Right, so the next process will involve us amending any data and moving through there. Now the normal sequence, so that's obviously just the normal budget process that you will be familiar with, establishing any loan parameters that may be applicable, that sort of stuff. Yeah. All right, what we will then do now is we will extend the forecast as the first stage in our next sequence, and we will factor in any increases from that point. So at this point, I'll leave those the same. And that extent now creates a second year, which is got here. If we want to fulfill the proper process, we would do a budget record recalc, which I will do so that we can understand the complete cycle. And this does base a full calculation to make sure that extent has been calculated in. We've taken it as a roll forward position, so if any balance sheets, we've all taken that, and then a system records recalc will happen when we go into our map. Right, so that brings us now to having the first year in place. And what we may want to do, or will do, is delete the first year, because that is no longer part of our budget cycle, nor do we want to bring the opening balance into the first year, because again, we should do the recalculation, and that has now produced us a 1 year forecast, which we're in the position from there. I'll very quickly do the recalc. Okay, so that has now deleted the first year. We have a forecast in creation there. So the next stage in our cycle is to bring in the opening balance sheet. So the records are recalculated to do that, and what we want to do is now bring in the balances that we want to determine that form the opening balance sheet, and that screen now will come up, and we will then be able to import the balances literally by designating the period we want to target. And so for this period, I will use March 16 as the import from Xero, so that will read the balances in from Xero, so that we will have now a populated balance sheet. And that has brought through the balance sheet, and we will see that right down to the retained earnings. Yes, the capital is a negative. So we can say OK for that. And that now has our opening balance sheet. So at this point, we can very easily provide our budgeted reports and the complete range of data that you would do for a normal process. The next step that follows after this is going to be importing the actuals on a month-by-month basis. So we now have imported the chart. We extended it to the second year, so we've got into the year that we want to budget. You'll notice with this we were allowed to basically designate the period we bring it in from, so you can notate which year you focus on to bring in. And once that is done, you then extend it forward so that you can create the budget for the forward year. And when the forward year is complete, you delete the existing year or the first year because you don't want that. And once that is ringing, we've now bring in the existing opening balance sheet, and that will allow us to report. So for example, the balance sheet here. So we've got our opening balance sheet and our projected position and updated. So the final stage we would do in the process, or now that you've got that completed, all of the reports are generated, you'll be able to move to entering of actuals. And just to show you the detail and level that we completed to, the actual process, start actuals, enter actuals, so that opens up the screen, and two-stage process, which period, and this is the profit and loss, and so we target April 16 and we import it. Though it can't be undone, you can over-import or repeatedly import for many periods, and that data will go back to Xero, bring in the data, or similar, and then stage from that, we will also import our balance sheet data as well, and you'll see there. So each month, we now in the actuals process, it's very simple to import data, specifying the period we're in and specifying that against the period you want to bring in from Xero. So once that completes, we are able to either move into the next period as we wish, enter actuals, roll it forward to May, bring in those actual data, target the period we want to import, and follow the process through. Okay, so that really finishes the whole cycle that we've created for the integration. So in a very short time, you can create a forecast from the historical data recorded in the system and provide that back to your client completely.